Nursing a cut of about 270 points as retail investors look at all of this uncertainty. And now, of course, we have a very, very real one here at home. How should they, continue to remain sort of unfazed when it comes to their investments? Let's ask Mr. A Balasubramanian, Managing Director and CEO of Aditya Birla Sun Life AMC. Thank you very much for joining in, sir. Always a pleasure to have you on. And we also have you on a day when we've got the AMC numbers, the monthly numbers. So let's start right there. SIPs are steady, but clearly the good times that the industry was having, all those NFOs mopping up 20,000, 25,000 crores in a month, that money is out of the system, which is why the peak flows have come down, by almost 85%. How would you describe the mood and the environment? And, what do you expect from the business if this uncertainty continues?
Yeah, thanks, Surabhi. As rightly pointed out, clearly the flows are divided into two parts. The existing schemes getting the flows, which has been the trend that we are seeing for the last almost 3-4 quarters. The existing funds like Flexi Cap Fund, A Balasubramanian Fund, smaller mid cap fund, they continue to see flows in the form of SIP. NFO is the period where, depending upon the gap, the NFO comes. And in fact, last year we saw a lot of thematic fund launches that we got significant flows coming in. And the NFOs will continue to be launched by people, either new players or existing players, depending upon where the gap exists. I think one of the fundamental shifts that we are always quite happy to see is actually the existing flows. The flows should come in the existing funds, and that continues. Like SIP has now become a more or less a permanent flows. I think I would have seen the number somewhere about 20% crores, the top line number. That again continues to remain a strong force of flows for the mutual fund industry. As a result of which, the DII investment in the equity market continues to remain positive.
Yeah.
From a maturity point of view, I always believe that the last 2-3 years, maturity of investors have been going up on each passing day as they start experiencing more and more better experience on investing in mutual funds. And the flows, the maturity also has been rising, I would say.
Sure, got that point. So just a moment, we're also looking at some very important flashes. Get back. So we were discussing, general liquidity levels within funds, and we were discussing this with Nilesh of Kotak as well in the morning. At Aditya Birla Sun Life, across all your schemes, what are the cash levels? And what is the approach? Would you be using any kind of dips, including maybe the one like today, to buy? Or as a fund house, are you taking a more measured wait-and-watch approach?
I think in general, equity managers, even as a fund house, don't give too much of cash because the money is given to us for investing in various sectors, stocks, depending upon where the comfort lies. Therefore, portfolio constructions remains fully invested at the point of time. But having said that, the cash level generally is about 3 to 5% kind of cash level. It varies from scheme to scheme. That is mostly to meet any kind of the position that one has to build from the margin point of view and any other point of view. So that's something has been the case. If that's the case, actually, most of the managers in the industry, I would say. At the same time, whatever the inflows that are coming in, temporarily it may lie in the cash component, but ultimately get deployed using the current market volatility as an opportunity. Look at where the comfort is there. Therefore, the sizing is one of the area of focus we always have. And wherever you need to increase the size on base of your high conviction that we have, and keep looking at those opportunities and build it as part of the portfolio. Therefore, the cash component is, even if it is there, is more temporary. And generally, we don't take call. But at the same time, there has also been opinion that we have been having as a fund house the last almost 1 year correction that we have witnessed in the equity market have brought the Indian market the equity valuations at reasonably good level, coming close to the long-term average. At the same time, the push that has been coming from both the government and RBI monetary policy by way of cutting interest rates, now reviving the growth momentum in the economy, which is what we are witnessing and some of the sectors that we are tracking. Therefore, the valuation discomfort otherwise used to exist for one to stay in cash, that doesn't arise. But on this basis of the current market conditions, we don't generally take a cash call. At the end of the day, it all depends upon how long the current uncertainty continues. One doesn't know. At the same time, the recent past that we have witnessed, that we have seen in the last 2 years,
right,
a similar uncertainty that have come and hit, but markets have remained somewhat resilient. Our belief is our market will come out somewhat resilient despite current the pressure that we are seeing and the broader the outlook perspective.
Bala, it's great to see you. Good afternoon, Prashant here. It's been a while. Could you, Bala, give a sense of what is the total cash that mutual funds are sitting on? I remember reading about 2 months back, I think it was, that it was the highest ever cash level that mutual funds had. Is that, I mean, that's a lot of firepower that MFs are holding on to. Do you have that number at the end of the month?
I think the number generally ranges, Prashant, between 3 to 5% on an average. The least that people own about 3% cash. It's not something they take cash call. It is inflow that keeps coming in. They take time actually to deploy it. That's one. Second is, as I mentioned earlier, for any other purpose that deal may come, therefore you must keep some amount of cash. But otherwise, cash call generally people don't take. But having said that, the outer limit would be about, say, 5%. On an average, we should not count more than about 3 to 5% number. If you take that number on a size of roughly about 40 lakh crore size, the cash component could be somewhere around of that amount. If you take roughly about 1 lakh 1 lakh 60 crores as industry aggregate number will come. Which in my own belief is it's something is good, but every fall that money could find its way to the market.
Yeah.
That's why we see the number. Whenever the market falls, domestic mutual investors have been the largest buyer in the market. I think it will remain. As I mentioned earlier, unlike the past, this time around, there has not been a significant concern on both the valuations as well as the economic momentum that could come back in the year 25-26, which also is somewhat is being counted upon for the market to actually see some of bottom. So that's where I think the mutual fund money will come in handy.
All right,
Okay.
Absolutely. Bala, thank you very much for joining us. Good speaking with you. It's a pleasure having you here on CNBC TV 18. And come back again, a lot more to discuss.